Domino's did disappoint with its results. Domino's delivered 28% earnings per share growth. Market was expecting 32%. Really the culprit was some one-off issues in their French subsidiary at the point of sale technology that did cause them some problems. That's now been rectified. There's also been an overhang on Domino's related to some of their franchisees not paying their staff properly. And I think that's getting rectified as well as sort of examined in more detail. So to us, those couple of issues are sort of shorter term issues that are getting rectified by the company. So when we try to assess what is the potential for Domino's, we get very excited about what we think is going to be one of the fastest growing parts of the market, which is digital delivery of food and beverage right across the market. So that is, in Australia, expectations are that the digital delivery of food and beverage could well double in the next 3 years. And a lot of market commentators expect in the US that the digital delivery of food and beverage could go 7 times in the next decade. So this is phenomenal growth. That's obviously attracted a lot of companies. So what we've seen in that space is a lot of aggregators into the space. So the aggregators like Uber Eats, like Menulog, like Deliveroo. So they see this amazing growth in the market and they want to capture part of it. The challenges that they've got is that they've got to combine a whole lot of organisation and operation and get the efficiency. So they've got to have an Uber driver or a Deliveroo person on a bike link with a local restaurant and then try and get that efficiently delivered. So their big issue is sort of delivering on time. So if it's delivered quickly, it's fresh and it's warm and it's a very good customer experience. But if it gets delivered in an hour, it's obviously a very negative experience. Domino's, in the vertically integrated model, their target is 3 and 10. Now that means 3 minutes to cook, 10 minutes to deliver. So if you're delivering a pizza to someone in 10 minutes, that's an incredibly positive consumer experience. It's coming fresh, piping hot, and when the person's still hungry. So that's a very positive experience. Domino's are delivery experts and they're getting that to the person. Now they're able to do that in the time from a few different things. One is they're upgrading their ovens, so they're going to be bigger, faster cooking ovens to get it to that 3 minutes. And the other thing is that through technology, through their GPS tracker, through improved efficiencies, as well as now being much closer to the end consumer, as they've continued to expand the stores right around Australia, they're now much closer to the consumer. It's making it easier and easier to get that 10-minute delivery to consumers. There is a couple of other points that are worth noting in that. And as Domino's has moved to Domino's Anywhere now, we think that's a fantastic an idea. So it's basically utilising the drop-in technology. So if we were in the park or we were at the beach and wanted to get it delivered to us, all we'd now do is we'd order through the Domino's app, we'd pay with our Android Pay or however we wanted to pay it. We'd then just say this is where we are. It's not to an actual address. It's just to where we're sitting in the park or where we're sitting at the beach, and that then gets delivered to us. And when you just think about where this can go in terms of when you're at the beach, what food or drink you might like, you can just see how why this incredible growth is going to occur in this space. We still look at Domino's and think, well, actually, we believe this is going to be a better, more valuable business in 5 years' time, and the growth opportunities that they have are still as huge as ever.